Oil is having its worst 6-month performance in 20 years. So what impact is this having on the raw commodity sector, especially gold and silver? Joining us today is our commodities expert, Peter Hugg, a global trading director for Kitco Metals. Pete, welcome back.
Yeah, nice to be here, Daniela.
So bad news for oil. Is that spilling onto gold and silver here? No pun intended, by the way.
Well, you know, what's confusing the market, especially with oil dropping, which is a very deflationary event, is that on the other hand, you have the Fed with a very hawkish comment that came out last week. So the market is trying to match up these two events. I mean, you know, oil breaking down right now, it's trading at just in the mid 42 level, is very deflationary, and you know, the Fed's primary goal is to get inflation to 2%, which would encourage them to continue raising interest rates. So it's a two-edged sword. You have a situation where you know, the Fed is looking for a 2% target, but you've got energy and food deflation occurring, which indicates to me the 2% inflation target is premised from a Fed's perspective on Trump passing his agenda of tax cuts, which then ideally would generate more income in the pockets of the middle class in America, which they would then spend and then push inflation up as the money chased fewer goods. I'm not convinced of that argument. I think if the middle class gets a tax cut, they'll probably use that money to pay down their debt. Right. So I think the Fed's in a quandary right now. But from a macro perspective, oil coming down, the deflationary aspect of oil coming down, and generally the food commodities coming down as well, it just indicates sort of a slowing of demand, and what silver is picking up there, and that's why I think silver has outperformed gold on the downside here, is that one of silver's components, besides being an investment metal, is obviously an industrial usage metal. And so there is some consternation and some concern that industrial demand for silver may also drop, and I think that's why you're seeing the ratio widen out to where it is right now at about 75-1 against gold.
Okay, I want to bring up a point you brought up earlier this week in one of your commentaries, Pete, that we might see retailers looking to get rid of silver stock over the summer, and that can help silver prices down the line.
Yeah, there's been a lot of secondary selling into the silver market, but silver has started to the spread on silver from a backwardation level is starting to increase, which indicates to me there's demand in the physical market at least beginning. So if we go back to the sort of 2015 scenario, silver was around these levels and it dropped, and it dropped into the 15s, and there was a surge of retail demand at that level. And the refineries and the mints were not equipped, and you know, silver immediately surged $3, and the premiums quadrupled. So this event might reoccur this year as we come into the summer, because I don't think the mints are prepared or do have sufficient inventories on hand for a retail surge in demand. If we can get silver to break down below 16, I think retail demand comes back in, and the surplus of physical silver in the market will vanish up almost immediately.
All right, we just might need that to happen to get these prices moving here. Peter Hugg, thanks so much for joining us.
You're welcome, Daniela.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.